Hello, welcome everyone. And my name is Seewing Yee, and my special guest is Julie here. And she's been on my regular podcast for a while now. And Julie, thank you for attending once again. And
Thank you.
today, today I'm going to ask Julie to put herself in the shoes of a regular real estate investor, whether you are a newbie, whether you are an experienced investor. I just want to hear your input. However comes out is not right or wrong answer, because again, you put yourself in the shoes of a typical investor. Play along with my game, if you will, with this game, which is going to be fun. It's a real game. We're doing real deals. And not only you and I are going to learn about various topics we can talk about, but you're going to learn yourself. You can gain more knowledge and better perspective. And you can also share your knowledge with the people in your community as well. Yeah, whoever they are. I know that's what you want, like as well. All right. So without further ado, let me share my screen. All right. So let's assume you as an investor have done a little bit of initial research and due diligence on this particular market. You may or may not be aware, I have this South Texas market, which I just began to promote. You may have seen some past video newsletter in the past couple of weeks. Nevertheless, let's assume you have done a little bit of research on this market, South Texas, and then you're narrowing your research. This is a new construction. Fourplex is a quad, and you have beginning the initial phase. You have looked at the pictures of this brand new Fourplex here in South Texas, and you saw the PowerPoint showed the growth of this market. South Texas is going through some very good growth. And as an investor, how do you think about it? You done all that, and now we on to the pro forma, which to the property tracker, which you are familiar with. So this is the next stage of your due diligence by looking at the cash flow analysis, by looking at the pro forma. So I want you to go over from a very high level, nothing too detailed, and see, I just took the liberty of creating this pro forma for you so you can do a review and tell me in your own words, what are your thoughts as you go through these numbers on this particular fourplex? Go ahead.
Oh, my goodness. I'm looking at a great deal right there. The price Fourplex in Texas, and I know the Texas market is really growing. You're looking at about looks like about a 25% down payment. But of course, you have to have your loan costs, your origination costs, your depreciation costs, things like that. So your initial cash is a little less than $150,000.
Right.
Now, the number that is exciting for me when you get to the right side of the page, after you've taken out the property taxes, insurance, management fees, all that, when you look at the cash flow line, you're getting just a little over $1,000 or less in cash flow. That to me is the exciting part. I look at three numbers. I look at the purchase price, the down payment, and then the cash flow. Those are the things that I would look at immediately without even going through all the other stuff.
Right.
When I see $1,000 cash flow, a little more than $1,000 cash flow, that's actually like approximately $250 per unit. And for me, as a newer investor, that's a good number. Even if you can get $100 per unit, but to get $250 a unit is good money. And then think about it from this aspect. You're not paying it. Your tenants, your 4 tenants that are going to be living there, the 4 families that are going to be living there, they are the ones that are going to be paying that mortgage, and you're going to be benefiting from that $1,000 a month cash flow. And for a lot of people, $1,000 a month, that can change your life. That's really a good cash flow. I think it's a great deal. But when I'm looking at
Did you see the upper right-hand corner? Rent to value ratio, capitalization rate, cash on cash return.
It's kind of hard to see, but is that like 1%?
Okay, let me bring down the 1%.
Right, which is good.
Yeah, 1% rule. You heard over the years, you never heard about the 1% rule.
Right.
1% rule is you take the purchase price, multiply by 1% equal the gross monthly rent. That won't represent a very high cash flow scenario, assuming 25% down payment scenario.
And this one just hits the mark. It's perfect. You got your rent, you got $5,400 a month in rent coming in. That's just right on target with the 1% rule.
What about I know I'm not going to ask you to dwell too deep into it. From a quick high level, what about the capitalization rate of 8.4%. What does that mean to you quickly?
Oh, I think that's a great capitalization rate because it's basically like the return on your money.
Yep.
Think about that. Think about it from comparing. You could take that 500,000 or the 150,000 or whatever down payment and leave it in the bank and get probably less than 2% on your money. It's safe, but it's less than 2%, which is not really keeping up with the cost of inflation anyway. Or you can get an 8.4% cash on cash return, or excuse me, 8.4% capitalization rate. We probably won't have time to get into all that now, but all the benefits you're going to get from the deductions and the write-offs with the property and the tax benefits and things like that, that's a great deal. That's a really great deal. And you own the property, and property values are going up in Texas. So yeah, it's a good deal.
Good. Once again, I did not coach you to say anything. This is coming out of your mouth. I know.
This has just been from me just learning and just from your audience that they may not know. I'm a brand new investor in my mind. I've been investing for less than 3 years. We started about the middle of 2021, and now we are in the middle of 2023. And my husband and I have been able to buy 6 properties in less than 2 years. I still consider myself a newbie, but I learn what's important, and then I look for it. And if the numbers line up, it's definitely something that you would consider. And that's how we ended up getting all 6 of our properties.
Yep, that's right. On the one hand, yes, I coach you through. In a way, you're right. You are a newbie. You are still a newbie because you have a late start in your real estate investing career, but that's the way it is. That you cannot change that. But
Right.
you are accelerating your knowledge. You're scaling your real estate portfolio. You already have 6 rental properties. So you are ahead of the game compared to a lot of people. So I appreciate
Absolutely.
that. But you still, anyway, getting back to this, go over the numbers. Okay. Now per door is like $1,250, $1,300. The numbers really, like you said, meet the 1% rule. For all 4 doors, all 4 units, $5,400 gross rent from the purchase price of $535, meeting the 1% rule, which is extremely rare these days. 1% rule, you can get it in the Midwest, right? The Midwest,
Right.
you get a very low price point with a high cash flow because those properties are much older. Is in a blue collar the market in the Midwest. You get the 1% in the Midwest, but to get a 1% rule scenario in the South and Southeast with new construction in a path of growth, like in Texas or Florida, whatever, that is a value add. Now, a couple more things I'm going to ask of you, okay? And of course, we did not do any kind of a predetermined discussion prior to this. So this is coming strictly from your thoughts and experience. So this fourplex is $535,000. Brand new for fourplex, a total of 4,000 square foot. Now, from your experience in a very fast growth market, in an emerging market, brand new, very rare to get a fourplex. So what comes to mind when you see a fourplex at $535,000, brand new, cash flow like crazy, 1% rule and 8.4% cap rate on all that $1,000 monthly net cash flow? So when you compare based on your knowledge of other markets, what pops up in your mind based on this type of fourplex? What are some of the things that above and beyond what we...
I'm trying to do some numbers here myself. I'm looking at the rent. I guess I'm landing on the rent, comparing it to what we've purchased, because most of ours have been single family.
Right.
So from a rental standpoint, you're getting about $1,350 a month per unit.
Right.
That's really good. That's an excellent property. So, because I compare it to what I know. We have 1 duplex, but the other ones are all single family. So I look at it, if I was going to buy 4 single family properties, would that still makes sense? And yeah, that makes even more sense to get $1,350 a property. Each one is still going to cash flow at $250 per unit. So that's still an excellent deal. I just think that from a standpoint of an investor, plus in paying down the loan, that's going to bring you a lot more cash flow in the long run. Because if you think about it from a long-term standpoint, and depending on how quickly or how slowly you pay off the loan, that's going to, and the other thing is, once you pay down the loan, your rents are going to be increasing too. So that's something that people have to keep that in mind from a long-term standpoint. your rents are going to be increasing over the period of time that you're paying off the loan. So at some point, minus the management fees and whatever minor repairs, you're going to end up getting about 85-90% of that cash flow once you've paid down those loans. So
Yep.
I think that's that. And that's what my husband and I are looking at doing. All of our loans were relatively small. Everything we bought was less than $100,000 total value of each property. And so we're looking to pay it off very quickly. Most of the loans are like $30,000, $40,000, $50,000. Yeah, we're looking to pay it off very quickly. And once they're paid off, then like I said, 85-90% of the cash flow is going to come to us. And we know that the rents are going to be up. Even though we've only had the property less than 2 years, but one of them we've had 2 years complete. We've already had rent increases on 3 of our properties. So we know that's coming. And like I said, our goal is to try to pay them off in 7 to 8 years. And then, like I said, most of the cash flow will be coming to us.
Yeah. So, Julie, what I hear you saying is that you're looking way beyond the first year projection on this pro forma or any other pro forma when you're, as a long-term risk investor that you are, you look at the multiple exit strategies into the future, second, third, fourth, fifth, and sixth year, how you can really do different things with your property, pay it down or have the tenant pay it down. Yeah, appreciation, then you get the tax benefit, you get the increasing rental income in the future. Yeah, so I really like the way your thought process. That's how you think as a long-term investor. Yeah.
And then I think that's the key, though. You do have to think as a long-term investor for these types of properties. These are turnkey properties, so you're not having to go in and do any work on them or anything. And then you're getting the providers, at least that we were working were up in New York. We were able to buy these properties below market value, most of them, because which put us in an immediate equity position because we automatically have equity because we're getting it below market. And people need to understand the long-term benefits of any investment.
Right.
And that would be true of any investment. If it's property, if it's stock market, if it's whatever type of investment is out there, I guess I would encourage your investors, don't go into it with I'm going to make money overnight mindset, because that's not what this is about.
Exactly.
It's not about it's about setting yourself up for life. Like my husband and I, I've already retired. My husband is getting close to retirement in the next 5 or 6 years. So we are looking to position ourselves with the real estate to have that income from the property replace his income on his job. Yeah, I think that we are tracking really well to do that. And we are still looking to purchase some more properties, even though we already have the 6.
Yep. Great. Yes, I know you, you share your experience with our audience quite a few times recently. Now, as we conclude on this particular module, I'm going to ask you a couple more questions, then we'll segue into another video topic. Now, this fourplex, once again, in South Texas, $535,000. Now, I'm going to ask you, can someone find a brand new fourplex, a quad, at $535K? Can you find it in other areas of Texas like Houston, Dallas, or San Antonio, or Austin? And one more question. What about in Florida, where it was a hot market? Can you find a brand new fourplex anywhere in Florida for $535,000 and renting for $5,400, 1% rule? Furthermore, can you find a fourplex, brand new fourplex, which is very rare? Most builders do not build brand new fourplexes. Very rare. You compare a similar apple to apple comparison to another fourplex in, let's say, in LA, Southern California, we live. How much is a fourplex at 4,000 square foot cost in LA? What?
About $4 million.
Yeah, whatever, right? And,
You're not going to cash flow.
No, you
can't.
can't.
No cash flow.
Of course not.
No.
Let's go through the overall U.S. marketplace. Can you find another new build fourplex in Phoenix, Arizona, Las Vegas, or Boise, Idaho for this amount?
No.
No.
And I think that's again the benefit of working with you, because you do have this inside information to where these properties are. See, people are not going to go on the MLS and find these properties.
Yep.
Because these are just isolated. So that is another advantage of working with a mentor, where you have had this experience, you have purchased yourself, and you have all these established relationships in these different parts of the country that will allow your investor students like myself to be able to take advantage of these types of properties and get these deals where we would never know about them. We would never know about them if we had no use. I'm very thankful for that.
Thank you. All right, very good. As we conclude the remaining 30 seconds we have, from your perspective, from your recap, now that you initially did your research on this market, South Texas market, with a fourplex based on these numbers, if you will, compared to the other markets, clearly this is a value add.
That's a value add for sure.
Any other recap based on your analyzing this deal?
Oh, I would say if you have the money, go ahead and buy it. Really, because you're not going to see, I look at again the rate of return, like we talked about, the capitalization rate, just all of that. It's like a trifecta. It's like the perfect storm. It really is like the perfect storm. I would encourage somebody, if they've got an extra 150 lying around, take advantage of it.
Exactly.
That's a good deal.
Very well said. Without a mind, there's nothing else I need to add. So let's conclude this video. Thank you for analyzing this deal.
Thank you.
It's a great experience for me to walk you through from your own words. You put yourself in the shoes of a regular investor out there, whether you are a newbie or experienced investor. Your thought process is still the same. Thank you for this analysis. Have a nice day.
Thank you.